close down your textbooks. No need. When I tell you open textbooks, that time you can open your textbooks. We are going to discuss partnership accounts. So the next 10 sessions will be dedicated only to partnership accounts. Very, very important because it is going to be tested in CPT level, and the advanced topics of partnership will be covered in the IPCC level. Okay. If you don't have proper understanding of the fundamentals, then you are going to face problems. Okay. And I think this topic will be there even in your BCom syllabus also. Is there?
Yes.
Partnership accounts. Our syllabus or our discussion will be limited to admission of a partner, retirement of a partner, death of a partner. We don't have dissolution accounting. That will be covered in the IPCC level syllabus. Okay. And combination problems, admission, death, admission, retirement. So we don't have combination problems also in our syllabus, and we are preparing for CPT. So we are going to be tested only on fundamentals. Okay. So now, what is partnership account? Before we start, what is partnership account? Tell me what is the meaning of partnership? Partnership act is over for you? Okay, so people who know the definition of partnership can tell me what is the definition of partnership? What is partnership actually? Okay. You can tell me what is marriage? Two people come together and they take a promise that they are going to live their entire life together. They are going to be life partners. They are going to give birth to a child and they are going to look after the child and they are going to live their life together forever till the time they die. They are not going to be separated. That is personal relationship. What is friendship? Again, relationship between two people, not two, more than two also sometimes. So we also make some promises in friendship. A friend in need is a friend in need. We are ready to make sacrifices for our friends. We do masti with our friends. We do masti with our friends. The friend does masti with us. He shares his problems with us. We share our problems with him. Because of us, sometimes he will be in trouble. Because of him, we will be sometimes in trouble. That is friendship. Okay. But there is no consideration, no? We are not doing it for profit. It is not a business. So, what is partnership then? Ship, common between friendship and partnership. Ship is, I think you know what is a ship. People travel together in a ship. Partnership is traveling together. But for what? If you ask the Partnership Act, the meaning of partnership, Section 2, not Section 2 I think. Partnership Act, the definition is contained in Section 3. Forget about it. Normally in all acts, Section 2 is a section where all definitions will be given. But Partnership Act is a, we can say, a unique act where definition of partnership is not contained in Section 2. It is contained in Section 3 of the Partnership Act, 1932. Okay, it's an old act. So, Partnership Act defines partnership as a relationship between two or more persons who have agreed to share the profits of a business carried on by all or any of them acting for all. So, this is the definition contained in the Partnership Act 1932. So, what is the definition? It is a relationship between two or more persons who have agreed to do what? Share profits of a business carried on by all or any of them acting for all. Okay. So, what is partnership? The partnership is a relationship between two people or more people. Why have these people come together? To share profits or losses. Share profits means profits is positive, losses is negative. Share profits of what? Of a business carried on by all of them together or any of them acting for all. See, sometimes what happens is, if two people start partnership business, one of them may invest capital, the other person may look after the business. The other person may invest capital but lesser amount, but will put more effort. Or sometimes there are two partners. One partner will look after marketing, one partner will look after production. So they are going to divide their business into departments, and few departments will be taken care of by individual partners. Sometimes the business is carried on by all partners together. Sometimes only one partner or two partners may take the responsibility of carrying on the day-to-day activities of the business. Remaining partners will be called as sleeping partners, and only on the day when the profits are shared, they are going to come and they are going to take their shares in profits. Partners who are working, they may get some salary because they are working harder than the other partners. No? So the types of partnership is not what we are going to learn in the partnership accounts. The types of partnership or the types of partners, we are not going to go into that because we are going to be concerned only with how to account for partnership transactions. Our role is, we are now changing our role. Our role is now, we are becoming accountants of a partnership firm. So now we have to treat ourselves as accountants in a partnership firm, and we have to learn how to record the transactions or how to maintain accounts for partnership business. Okay. So before we go into accounting for partnership business, first of all we have to learn the meaning of a document, or I'll tell you what do you mean by partnership deed. Partnership deed. See, when you are entering into partnership business, when you are entering into an agreement with some other person to carry on partnership business, you are going to write an agreement, or you are going to agree on certain conditions. So you are going to see, what is the definition? It says partnership is the relationship between two or more persons who have agreed what? To share profits of a business carried on by all or any of them acting for all. So is there an agreement only to share profits? Will they have other agreements also? Will they agree about other conditions also? Definitely yes, boss. Many other conditions have to be agreed. If you don't agree on certain very important conditions, in future you are going to have a quarrel. You are going to fight among yourselves and you are going to break the partnership. So to avoid conflict in the future, to avoid problems in the future, what the partners do is, before they start their agreement, before they enter into the agreement, they are going to list down the terms and conditions. Everyone will read those terms and conditions and agree to it. Once you have agreed, you are binding. You cannot say that I did not agree to this, or I thought something else, I assumed something else. You cannot say all those things because everything will be on paper. So now please tell me, what are the things normally you would like to put in the partnership agreement or in the partnership deal? First of all, the question comes, we both want to start a business. So suppose there are two people or three people, they want to start a business. The first question in their mind will be, what will be our name? Because you want to do a business, there should be a name, no? As soon as a child is born, first we put a name to him. Because it is very difficult to identify that person without a name, no? So as soon as a partnership business is started, or when they have an intention to start a business, first of all they would like to agree on a name. Because names are very, very important for Indians more. Because we have a lot of sentiments. So first thing they are going to agree is, what will be the name of the firm? Now, what is name of the firm? Name of the firm is a common name of all partners, that's it. What is name of the firm? It is common name for all the partners. That is called as the name of the firm. So they will agree for the name of the business, name of the firm. Only one condition. They would also agree, where will we carry on our business? Principal place of business. They have to agree on that. Where am I going to carry on the business? At the, we can say, at the premises of Mr. A, or are we going to take a premises on rent and carry on our business in that rented premises, or are we going to take one or two rooms from B's home, the other partner, and carry on our business in his home? So what are we going to do? Where we are going to carry on our business? Because we would like to tell our customers that this is the place where we are carrying our business. We would like to tell our suppliers what this is the place where we have our office. Bank will also ask, no, where is your principal place of business? When you go for opening an account, they would like to know your principal place of business. So definitely you have to agree about the principal place of business. Not only that, what will be your business first of all? Nature of business. Are you going to go into cinema production? Are you going to manufacturing business? Are you going to go into services business? What are you going to do? What is your business going to be? Are you going to set up a software firm? So what business you are going to do? Are you going to become a retailer, wholesaler, trader, manufacturer, service provider, consultant? What business you want to do? So you have to list down the nature of activities of the firm, what business they are going to get involved in. Are you able to understand? So what are the things we are going to agree about? Name of the firm. Second, principal place of business. Third, nature of business. Not only that, in the partnership agreement itself, we have to identify who are the partners. Name of the partner, his age, address, occupation, father's name, everything has to be written in the partnership deed itself. So partnership deed should identify the people who are going to enter into this agreement. So if there are 3 partners, we have to give the personal details of all the 3 partners. Personal details does not mean that how many acres of land you have or how many kgs of gold you have. Not that. Name, address, occupation, your father's name. So what you do, how to identify you, where to find you, that has to be given in the partnership deed. Only 4 things. Any more? Profit sharing ratio. See, his mind is always thinking about profit sharing. Why? Because the business is started with what intention was? To share profits of a business carried on by all or any of them acting for all. So, profit sharing ratio. So, if 100 rupees of profit comes, how much A should take, how much B should take, how much C should take? Because that is what they would like to first of all understand. Remaining all things you can forget. Remaining all things you can forget, but this is the most important condition. Out of 100 rupees of profit, how much everyone is going to get, or every 10 rupees of profit, how much everyone is going to get. So we have to give the profit sharing ratio. Is it going to be 50-50? Is it going to be equal, or is it going to be not equal among the partners? Are you going to share in the ratio of 3:3:4, 4:3:2? What ratio you are going to share? That ratio also has to be specified in the partnership deed. If this is not specified, what will happen is, in the future, if a partner gets a smaller share, he will say, I expected more, you people are taking more, I am taking less, so you people have cheated me, I will go to the court, I will not participate in the business. So there will be a lot of conflict, and unless the business will come to a standstill. Only. So 5 conditions you have set. Name, principal place, nature of the business, then identifying the partners, profit sharing ratio. That's it. 5 paragraphs, over.
Duration of the business.
Duration of business. Normally partnership is at will. What do you mean partnership at will? It will continue till the time a partner gives a notice of dissolution. Partner says, no boss, it is sufficient, we have done a lot of partnership business till now, let us stop our business. That is called as partnership at will. Specific partnership or limited period partnership. In such a case, the partnership deed will specify that partnership will be for a period of 5 years, 10 years, or for a particular transaction, only for a particular business. Suppose we can say the partners want to construct a project, they want to construct a building, and after the building construction is over, they want to break their partnership. They have come together only for one construction of building. After that is over, they don't have intention to carry on because they want to do their business independently. In such case, it will be called a specific period partnership, limited period partnership. Duration also we can say. Whether it is partnership at will or partnership which is going to be limited only for a specific period or for a specific transaction, that has to be mentioned. Very good. Any more things you want to include in the partnership deed? Capital. कौन कितना लगाएगा पैसा? How much he is going to invest? How much A is going to invest? How much B is going to invest? How much C is going to invest? How many crores they are going to bring, or how many lakhs they are going to bring, or how many thousands they are going to invest? So capital which the partners are going to bring, that has to be mentioned in the partnership deed. Anything more? Loss. What loss? If you have agreed on profit sharing ratio, loss should also be cleared in that ratio only, no? But it is rare. Anything more? So if you want to enter into partnership business with her, no, you have to be careful. If you want profit, she doesn't want any share in losses. Tell me. Working partner. So he is concerned. He wants to work like a donkey in a partnership firm. So he is only concerned about his salary. So he wants to know if a partner is working day, night, 24 hours, 365 days, he is always online. He is always available for the customers, he is always available for the employees, always available for the suppliers. He dreams, sleeps, eats in the firm and works for the firm. Eating and sleeping will not be sufficient. He also works for the firm. So everything happens only in the firm for this partner. So he would like to expect a salary, no? He would feel that other partners are not spending the same energy. I am putting my entire life, I am spending my entire life in the firm. So I want something incentive. So we would have to fix to a working partner how much salary we are going to pay per month, per annum, what are we going to pay him? That has to be mentioned. Okay. Or else what will happen is, a guy like him will work like a donkey for the entire year. At the end of the year, he will say, give me a salary for. Other partners will say, when did we agree that we will pay you salary? The other partners will say that. Why should we give you a salary? You're getting share in profits, no? Then he will say, you people sat at home. I was sitting here working very, very hard. So I want a salary. He will say simply, it was not agreed. He cannot claim it. If he goes to the court also, the court will say there was no agreement. Hence you cannot claim it. So, salary to the working partner has to be mentioned in the partnership deed. Anything more?
Percentage of interest on drawing.
Percentage of interest on drawing. What is drawing first of all? See, partner wants to survive. He wants to survive, he wants some money. So where will he get money? He has to draw money from the business. He is drawing money from the business out of profits earned by the firm. So he knows that the firm is earning profits every month. He wants some money for his family, so he will start drawing money from the firm and use it for his personal purposes. So to discourage drawings, the firm may sometimes put a condition that whenever a partner draws money, he will be charged some interest on drawings. But interest on drawings will be charged only from the date of the drawing up till the end of the year. That's it. Because at the end of the year, profits will be calculated and drawings will be set off against the profits. Okay. So interest on drawings, very important point he said. You have to mention about the interest on drawings. Rate, percentage you have to mention.
So in interest of capital.
Interest on capital, very good. Sometimes partners may agree to allow interest on capital also, partnership agreement. Now, when will it happen? Suppose there are two partners, partner A, partner B. They have agreed to share profits equally. They have agreed to share profits equally. A invested 10 lakhs, but B is able to invest only 8 lakhs. They have agreed to share profits equally. A is investing 10 lakhs for his 50% share, but B is investing only 8 lakhs. In such a case, A will say, boss, I am giving loan, I am contributing capital over and above my share in the profit sharing ratio. I should also, according to you, I should also invest 8 lakh, but I am investing 10 lakh. So extra 2 lakhs I am investing, no, for that I want some incentive. So to provide incentive to him, the partnership deed may provide that partners may be paid some interest on capital. Generally that is why interest on capital is allowed. So if partners want to take interest on their capital, that also has to be mentioned in the partnership deed. At what percentage, that also has to be mentioned in the partnership deed. Simply we will say, we cannot say that partner should be paid interest on capital. Now question comes at the end of the year, partners will fight. At what rate of interest? One partner will say take only 6% interest. Other partner will say will take 60% interest. Greedy people, no? So there will be a fight about the percentage also. That is why you have to agree the percentage also at the beginning of the partnership itself. Or during partnership also you can make some amendments to the partnership deed and get it registered, no problem. Amendments also can be done. Any more? Further capital. Okay, that also can be mentioned, but not a very important point. Books of accounts. Who will maintain books of accounts? How we are going to maintain books of accounts? That will also be mentioned in the partnership deed. Bank account. Who will operate the bank account? Somebody has to operate the bank account, no? Simply opening a bank account will not be sufficient. Somebody has to deposit money, somebody has to write checks to issue, to keep making the payments to the suppliers. So which partner will be authorized to operate the bank account? Who will get the check signing authority? That will also be mentioned in the partnership deed itself. Okay. In the future, when a partner is admitted, how will we talk about, how will we deal with goodwill? On what terms and conditions will take a new partner into the firm? That will also be mentioned. If a partner dies, how to settle his account? If the partner goes into dissolution, the partnership business is stopped, how to close books of accounts? All these details will be mentioned in the document called as the partnership deed. Okay. So Partnership Act does not make it compulsory for the partnership deed to be registered. The government has appointed registrar of partnerships also. You can take your partnership deed, pay necessary fees, follow the legal formalities. You can get your partnership registered with the registrar of partnerships. Okay. If you don't register your partnership, then the Act has created certain limitations, certain disadvantages which makes which makes it better for partnership firms to get their partnership deeds registered. If you are not a partnership firm which is registered, if you have not registered your partnership deed, then there are certain limitations in the Partnership Act which are going to hit you very badly in certain circumstances. So partnership firms, to avoid those limitations, to avoid those disadvantages, they will get their partnership deed also registered. Okay. And if the partnership business wants a PAN card from the income tax department, the income tax department will ask first of all for the partnership deed and the registration certificate also. Hence, today we can say, even though Act does not require partnership deed to be registered, because of certain limitations, it has become, now we can say, mandatory for the partnerships to be registered under the Partnership Act 1932. Is it clear?
Yes,
I would understand. So these are the terms and conditions which are normally mentioned in the partnership deed. Is it clear? Now, we have to now learn the fundamentals of partnership accounts first. There are certain transactions, there are certain events which were not dealt in sole proprietorship business. When we discussed final accounts, we only discussed about final accounts of a sole proprietor. Who is a sole proprietor? A person who is individually carrying his business without the help of anybody else, without cooperation of anybody else. Whole and sole. Sole proprietorship business. That is what we learned in final accounts. But now we are learning about partnership accounts. There are certain transactions which are unique or which are different when compared to sole proprietary business. So how to deal with those transactions which are unique to partnership business, that is what we are going to learn in today's class. Okay, start. Write down. No, story will come. Treatment of goodwill and all those areas. No, I'll tell you a nice story. You'll remember it for your lifetime. Write down. Point number 1. Treatment of interest on drawings. Underline. Please write down some notes. Interest on drawings is an income to the firm. Is an income to the firm. The firm will, full stop, and then write, the firm will charge interest on drawings. The firm will charge interest on drawings tell me, when? At what rate? When will the firm charge interest on drawings, at what rate? 6%? 6%, how many will say 6%? I don't know, but whenever I ask any question on partnership, the most common answer I always get is 6%. 6%. I don't know where you have got the 6% into your mind. Not only in CPT class, even IPCC class, when I ask anything in partnership, even though it is not required, there is a 6%. Maybe in your intermediate you would have learned 6% somewhere, so it will be imprinted in your mind. Any question you ask, same answer comes, 6%. Write down. So what did I write? What did I say? The firm will charge interest on drawings only when the partnership deed provides for it. Only when the partnership deed provides for it, and at the rate provided in the partnership deed. And at the rate provided in the partnership deed. So before the firm charges interest on drawings from the partners, the firm, the accountant has to see whether the partnership deed allows the firm to charge interest on drawings from the partners and at what rate. If the partnership deed provides for it, then you can charge interest, and at what rate? Rate provided in the partnership deed. Continue. Continue. If the partnership deed is silent, tell me.
6%.
Fantastic answer. I always get this wrong answer. If the partnership deed is silent, no interest on drawings will be charged. No interest on drawings will be charged. See, today till the end of the class, whenever I ask the question, you will only say 6%. If the partnership deed is silent, no interest on drawings will be charged. Okay. Next, whenever interest is charged, write down. Whenever interest is charged, it will be calculated from the date of drawing, up to the last date of the accounting period. From the date of drawing and up to the last date of the accounting period. So if a partner draws money on 1st May and the firm is following calendar year, 1st May to 31st December, the firm will charge interest to the partner. The same partner again draws money on 1st August. From 1st August to 31st December, the firm is going to calculate interest and it is going to charge interest on the partner. Interest income for the firm, expense for the partner, loss for the partner, income for the firm. Is it clear? So now my question is, drawing is like a loan given by the firm to the partners. Now, why should I calculate interest only from the date of drawing up to the date of the end of the financial year, accounting year? Why? Why? From the date up to last date I am saying. Why? Up to last date only why? It's a loan given, no? The logic is, the loan is assumed to be repaid at the end of the year. Sir, how? The partners are not paying, no? See, when at the end of the year accounts are prepared, profits will be calculated and profits will be shared. Once profits are shared, the drawings are assumed to be repaid out of profits. And partners have been drawing money in expectation of profits. So drawings will be nullified by sharing profits. That is why we calculate drawing, interest on drawing only up till the end of the year. Is it clear? Let us not go too deep into it, that is not necessary. Continue. Entries. Now tell me, right, when interest is made due. Interest is income for the firm. So interest should be credited or debited in the books of the firm. Firm means the partnership firm, business. In the books of the business, interest is income. So interest account should be credited. So credit to interest on drawings. Debit. Where will I give debit? Will the partner give us cash for this interest on drawings? Don't expect he is going to give you cash. So you have to debit the interest on drawings to his capital account. Write down. Partner's capital or current account debit. You are going to deduct it. From partner's capital or current account. So what will be the debit? Partner's capital or current account. So what is the entry I have passed? partners capital or current account debtor to interest on drawings. Interest on drawing is credited because it is income for the firm. This income has to be deducted out of the capital of the partner. Hence, capital account is debited. Is it clear? When partner contributes money, his capital account is credited. When you want to deduct his capital, you are going to debit his account. Is it clear? Are you able to understand? Now, next point. Next entry B. When interest is transferred to P&L appropriation account. When interest is transferred to P&L appropriation account. Write down entry. Now I want to close this income account. It's a nominal account. I want to close it. How will I close it? Debit the account and credit P&L appropriation account. Interest on drawings account debtor to P&L appropriation account. Because of this entry, interest income nominal account is opened. To close it, I have debited it and credited the profit and loss appropriation account. What is P&L appropriation account? It is continuation of the profit and loss account. Before you share profits, certain adjustments have to be done to the profits. Those adjustments will be shown in the profit and loss appropriation account. What is P&L appropriation account? It is a continuation of the profit and loss account only. Is it clear? Continue. So these are the two entries we are going to pass. Can you tell me a shortcut entry? Instead of passing two entries, can you pass one entry? Partners capital or current account debtor to P&L appropriation account. Okay. Everyone understand? These are the two entries we are going to pass. Next. Next you write. Interest on capital. Now, just now we discussed firm is going to charge interest on drawings. Now partners want to charge interest on the firm. Partners want interest from the firm on their capital. So how are we going to deal with it? Interest on capital. Now tell me, when can the partners ask for interest on capital? At what rate of interest? What rate of interest?
It is in partnership.
Somebody please tell me 6% now. 6%. Very good. As per partnership deed. Only when the partnership deed provides for it and only according to the rate mentioned in the partnership deed. Forget that percentage called as what? 6%. Write down. Write down. First of all tell me, interest on capital, who is paying to whom? The partner. So it is an income or an expense? Write down. Interest on capital is an expense for the firm. Is an expense for the firm. Now, before I discuss further, please remember one very important logic. Partners are expected to share profits only. The philosophy of the Partnership Act is partners should take only share in profits, nothing else. That is the basic philosophy of the Partnership Act. So whenever partner is taking something from the firm, he may take it in the form of salary, he may take it in the form of interest on capital, he may take it in some other name. But the Act says, boss, partners don't expect anything else other than share in profits. If you are taking something else from the firm, it is also assumed that you are actually taking what? Share in profits. So my question is, when can you take share in profits? When there are profits, you can try to take a share in the profits. When there are no profits, can you take a share in profits? Then you have to share losses. Are you able to understand? So now, interest on capital. The philosophy of partnership is interest on capital is another way of taking share in profits. It is indirectly trying to withdraw profits from the business. When can you withdraw profits from the business? When there are profits, you can withdraw profits. When there are no profits, what can you suck out of the firm? You can suck only blood out of the firm. Are you able to understand? Write down. Normally, interest on capital is an appropriation. Normally, interest on capital is an appropriation of profits. What is the appropriation of profits? Appropriation of profits. Write down. Normally, interest on capital is an appropriation of profits unless the deed provides it as a charge. The deed provides it as a charge. Now, a very weak person, only 30 kilos weight, like Kaustubh, goes to a hospital and says, take two packets of blood out of my body. Will the nurse take 2 packets of blood from his body? Nurse will say, Babu, you take one apple. No. We don't want to take even 50 ml of blood from your body. Why? You don't have anything, first of all. So how can you donate? Now if a guy like him goes, then whatever is available they are going to suck out. Both ways. Are you able to understand? Same way, if there are profits, partners can suck interest on capital out of the firm. When profits are available but in small quantity, they can suck only that much. If there are no profits, then they cannot take any interest on capital. That is called as appropriation. So interest on capital can be charged by the partners. The firm will pay interest on capital only when there are profits. If there are no profits, what will they pay, boss? And I told you, what is interest on capital? It is nothing but sharing profits but with some other name. You are actually sharing profits but with some other name. When can you share profits? If there are profits, you can share it. If there are no profits, what will you share? You understand? So Kaustubh cannot give any blood. These people can give blood because they have sufficient amount of it already available. He doesn't have anything, so he cannot give anything. Is it clear? Just don't take it personally. Okay. So write down. Now he will go and check whether something will come out. Write down. Continue. Now he is already showing, sir. Write down. If there are sufficient profits, full interest will be paid to the partners. Full interest will be paid to the partners. So whatever interest is calculated, they will pay. If profits are there but insufficient, if profits are there but are insufficient, then mathematics student, that is why I was looking at you. You tell me something.
Ratio.
What ratio? Profit. In the ratio of capital. Write down. If the profits are there but insufficient, available profits should be shared in the ratio of capital of the partners. Should be shared in the ratio of capital of the partners. So if you have lots of profits, whatever interest you have calculated, pay it. If the profits are there but insufficient, profits are not sufficient to pay the whole amount of interest, then whatever profits is available, share it among the partners in which ratio? Capital ratio. If there are losses, Write down. If there are losses, tell me. If there are losses, no interest on capital will be allowed. If there are losses, no interest on capital will be allowed. Okay. Now, please remember. Write down. Next point. Interest would be paid only when the partnership deed provides for it. Interest will be paid only when the partnership deed provides for it. And at the rate provided in the partnership deed. And at the rate provided in the partnership deed. And at the rate provided in the partnership deed. Okay. Now what does the sentence mean? If the partnership deed is silent, write down. If the partnership deed is silent, no interest on capital. If partnership deed is silent, no interest on if the partnership deed is silent, no interest on capital will be paid. So before you want to pay interest on capital, what should you read? Partnership deed. Partnership deed provides, yes, partners have to be paid interest on capital. The partnership deed gives the rate also. Only then you are going to pay interest. Then question comes, whether it is an appropriation or a charge. If the answer comes appropriation, appropriation means if sufficient profits are available, pay full amount of interest. If profits are available but in small quantity, insufficient, share the insufficient amount among the partners in their capital ratio. If there are no profits or there are losses, no interest on capital will be provided. But please remember, the partnership deed provides that partners have to be paid interest and it is going to be considered as a charge. Charge means irrespective of profits. Whether you get profits or losses, you have to pay interest on capital. So it will be only when the partnership deed provides the interest on capital as a charge. Normally what is interest on capital? Appropriation. Appropriation means will be paid only when there are profits. But the partnership deed says, boss, interest on capital is a charge. Then you need not worry about profits. Whether there are profits or losses, you have to pay full amount of interest to the partners. So whether it is an appropriation or a charge, you have to read the partnership deed to get clarity. Are you able to understand? Okay, continue. Entries to be passed. Entries to be passed. A. When interest is due, now tell me, interest on capital is an expense for the firm. Hence, in the books of accounts of the firm, expenses should be debited. Debit. Interest on partners' capital, debit. Interest on debit. Two. Will you pay cash? No, boss. We are not going to pay cash to the partner. We are going to increase his capital balance. We'll give credit to which account? Capital account. Whenever the partner wants, he can draw money from his capital account. Is it clear? So we are going to get partner's capital or current account. To partner's capital / current account. Now tell me, on what amount of capital you are going to calculate the interest? Opening balance, closing balance, Average balance. On what balance of capital you are going to calculate? Normally it is on the opening capital. Opening capital you are going to pay full year interest. During the year, if some further capital is introduced, from the date of introduction up to the date of the end of the year, interest has to be allowed. If there has been drawing of capital, drawing can be of two types. Drawings of profits, drawings against capital. Drawings of profits, that is what you have learned till now, interest on drawings. Drawings against capital, if you withdraw your capital, then you have to calculate interest on capital on the reduced amount from the date of drawing till the date of the end of the year. Suppose there are no changes in the capital account balance, so opening balance full year you can calculate. Suppose there is fresh introduction, so on the amount introduced from the date of introduction up to the date of the end of the year. If there is some withdrawal, on the reduced balance you have to calculate interest from the date of drawing up to the date of the end of the year. Is it clear? You are all mathematics students, boss. You should understand this much at least. Okay. So that is how we are going to calculate interest on capital. What rate? The partnership deed provides. B. When interest is transferred to P&L appropriation account. Now you are all my students, final account students. Tell me, interest on partner's capital nominal account. How will you close it? Credit the account and debit which account? Profit and loss appropriation account. Special graveyard. You remember graveyards? Trading account was a graveyard of what? Direct incomes and direct expenses. P&L account was the general graveyard. All other accounts which do not die by diving into the trading account, we throw all those accounts into the P&L account and close them. Now these are special accounts. For them we have digged up a special graveyard called as the profit and loss appropriation account. You could understand? Take it properly. Good. Can you tell me a shortcut? Instead of writing 2 entries, can I write 1 entry? Instead of writing 2 entries. Debit, credit, cancel. What is it that remains? P&L appropriation account at R2, partners capital or current account. Next topic. Interest on loans, advances. Interest on loans and interest on advances. Now I want to ask you, when can the firm pay interest on loans and advances given by partners? At what rate of interest? 6%. Again answer is wrong. If partner is providing loan, if partner is providing advance to the firm, how much interest should the firm pay to the partner? Again answer comes 6%. Answer is not completely wrong, but partially wrong.
5%.
5%. Good news from nursery. Guy behind you. It is not 6%, 5% story. Again, it is as per the partnership deed. If the partnership deed is silent, then the Act provides, Partnership Act provides 6% per annum, not 5%. Continue. Again, I know from where that 5% is coming. It is coming from company accounts. He has some reminiscence of the company accounts topic. Interest on calls in arrears, calls in advance. So whatever percentage we know, we should throw at the faculty. Something will hit him. Right down. When a partner gives, when a partner contributes money over and above his capital contribution, when a partner contributes money over and above his capital contribution, it will be treated as a loan. It it will be treated as a loan or an advance. Sometimes the firm does not have money to pay salaries, the firm does not have money to pay rent. Immediately one of the partners may bring some money and try to make those payments. He has already invested capital, but the money was not available. On a particular month, you have to pay current bill, you have to pay salary, you have to pay rent. Firm doesn't have money. So one of the partners, what he does, he goes to his bank account, he goes to his bank, withdraws money from his bank account, puts money in the firm's account and starts making the payments. He's already contributed capital, but he's bringing some money over and above his capital contribution. It will be considered as a loan or an advance. Is it clear? Continue. So if he has given a loan, he would like some interest. The firm will pay interest to the partner on such loans and advances. The firm will pay interest to the partners on such loans and advances. On such loans and advances at the rate provided in the partnership deed. At the rate provided in the partnership deed. The firm has to pay at what rate? Provided in the partnership deed. If the partnership deed is silent, if the partnership deed is silent, right on. If the partnership deed is silent, the Act provides for 6% per annum interest. The Act provides for 6% per annum. Write down. Interest on loans and advances is a charge against profits. Interest on loans and advances is a charge against profits. It is not an appropriation. Charge against profits. It is not an appropriation. Now, the logic is very simple, boss. If an outsider gives you a loan, can you tell him, sir, we don't have profits, we can't pay you interest, so you go forgo your interest, we have eaten away your money, he'll kick you and take the money out. Yes? Same way, when a partner gives a loan, he would also expect interest whether the firm is making profits or not. Everybody understand? Charge means whether there are profits or not, irrespective of it, he wants interest. That is charge. Appropriation means only when there are profits, when we pay interest, that is called as an appropriation. It's a charge, it is not an appropriation. Is it clear? At what rate you have to pay?
Provided
Provided in the partnership deed. If the partnership deed is silent, 6% per annum the Act provides. Okay, interest, entries. Tell me, interest is an expense for the firm, no? What is it till right? Interest on loan account return will not pay it in cash to the partner. Will credit his partner's capital or current account. Interest on loan account return to partner's capital or current account. A. Now again, interest on loan is a nominal account. It has to be closed by transferring it to the P&L, not P&L appropriation account, P&L account. Write down. When interest is transferred to the P&L account, mark there with 5 stars. It's a charge against profits. It should not be debited to the P&L appropriation account. It should be debited to the profit and loss account only. So before determination of profits, you have to subtract this. Before determination of profit, interest has to be subtracted. Is it clear? Before you calculate what is the profit for the year, you have to subtract this. Enter entry. P&L account, net R2, interest on partner's loan. P&L account R2, interest on loan. These are the two entries we are going to pass for interest on loans and advances. Next treatment. Salary, remuneration, commission to the partner. Salary, remuneration, commission to the partner. Salary, remuneration, commission to the partner. Write down. Now what is this? A working partner, that means who is every day looking after the day-to-day activities of the business. He would like some salary from the firm, or he would like some commission, or he would like some remuneration for his work. So it is an expense for the firm, it is an income for the partner. Write down. It is an expense for the firm. Normally an appropriation. It is an expense for the firm. Normally considered as an appropriation. So as soon as you say appropriation, you should remember Kaustav. Normally it is considered as an appropriation unless the deed calls it as a charge. Unless the deed calls it as a charge. What is an appropriation? Pay it only when there are profits. Don't pay it when there are no profits. But the partnership deed says, no boss, salary has to be paid to working partner irrespective of profits. Then it's a charge. Whether there are profits or not, you have to pay the salary, remuneration, commission to the partner. Is it clear? First of all, you have to read the partnership deed. How much will you pay? When will you pay? Write down. Partner can claim salary, remuneration, commission. Partner can claim salary, remuneration or commission only when the partnership deed provides for it. Only when the partnership deed provides for it. That means this should be agreed at the time of entering the partnership agreement. Okay? Only when the partnership deed provides for it. If the partnership deed is silent,
No salary.
very good. If the partnership deed is silent, no salary, remuneration or commission will be allowed to the partner. If the partnership deed is silent, no salary, remuneration or commission will be allowed to the partner. No salary, commission or remuneration will be allowed to the partner. Full stop. Okay. Entries. A. When salary, remuneration, commission is due. These are expenses for the firm, no boss. So what is the entry will write? Debit. Salary, remuneration or commission account debtor. Salary, remuneration, commission or remuneration account debtor. Salary, remuneration, commission account debtor. Debtor. Two. Will you pay cash? No boss. Will increase the partner's capital or current account balance. 2. Partner's capital or current account. So you are saying two accounts, capital current. when should we use capital, when should we use current account. Tomorrow's class will discuss when will we consider capital or when are we going to use the current account. Okay, continue. Simple logic, remember, if we are following fixed capital method, we are going to use current account in the entries. If we are following fluctuating capital method of maintaining the capital account, then we are going to use partners capital account. If we are following which method? Fixed capital method, we are going to use partners current account. If we are following fluctuating capital method, then we are going to use partners capital account in the entry. So based on the method of maintaining the capital account, the relevant account has to be used in the entry. If it is fixed capital method, use partners current account. If it is fluctuating capital method, use partners capital account in the entry. Second entry B, when salary remuneration commission is charged to P&L account, P&L appropriation account, sorry. When salary remuneration or commission is charged to P&L account, when salary remuneration or commission is charged to P&L appropriation account, what is entry will pass? P&L appropriation account debtor to P&L appropriation account debtor to salary remuneration or commission account. Okay, these are the two entries we are going to pass. So we'll stop the class today. Now what I want you people to do